Business news now. Let's bring in Ed Boyd. Ed, good morning. Yesterday, the Star Entertainment Group outlined a 130-stage plan to regain its Sydney casino licence. 130 stages. It's quite a few.
Oh, it's a massive plan here from the Star Casino. Basically, they've been stripped of their licence. They are allowed to continue operating their casino in Sydney, but the New South Wales gaming regulator a couple of weeks ago said they were unsuitable to hold that licence and would take it away permanently if the Star didn't clean up its act inside the company. So yesterday, they finally responded to this show cause notice from the New South Wales gaming regulator, outlined a 130-step plan which will run from now until the end of 2024, and they're hoping that by then they'll be able to run the business completely alone by themselves without any additional supervisory support. But this plan is pretty detailed. It goes into a lot of hiring a lot more additional financial crime employees, improving facial recognition cameras and improving their whole systems internally at the casino. And I think if they do follow this plan, then they're likely to retain their licence, Pete.
The British pound is in the toilet at the moment, Ed. Global markets are concerned the US economy could fall into a recession. If that were to happen, what would it mean for Australia?
This is a question that I've been asking a lot of economists over the past couple of weeks, and I was a little surprised by a lot of them saying it's actually not going to have much impact on Australia at all if the United States falls into recession. So they're in a technical recession already. They've had 2 quarters of negative GDP growth. But the real sign of a recession is rising or very high unemployment. Right now, unemployment in the US is starting to tick up. It's gone up to 3.7% and expected to keep rising. So that's what's happening in the States. But over here, what economists have been telling me, the big risk for us, number one, it's the impact of rising interest rates on Australian mortgage holders and when they're going to have to really start prioritising money spending on their mortgage over other things. And that could be in the next couple of months. And the other risk for Australia is China's economy. And if they continue to have problems, slow down in demand from China, slow down for buying iron ore and mining products like that, that's the bigger risk for Australia than the United States, Pete.
All right, and Ed, tomorrow we'll get to see the first monthly inflation indicator from the Bureau of Statistics.
This is something that a lot of economists have wanted for years and years. From tomorrow, we're going to see the months of July and August. So that'll help us get an understanding of where inflation's going in the September quarter, which is about to wrap up. And then it's not until the end of November that we'll get the info for each month. So we'll get October's information at the end of November. We'll get November's information at the end of December. So it's basically going to become a monthly inflation indicator data from the Bureau of Statistics, and it will help everyone understand where inflation's going in Australia much more accurately, because at the moment we get quarterly figures and they come out almost a couple of months after the quarter's even finished. So we're going to get more accurate info, and it'll help the Reserve Bank in particular when they want to make those interest rates decisions.
Ed Boyd there, the best in the business. Appreciate that, Ed. Thank you. We'll talk to you again soon.